If you've been following the housing market lately, you've probably seen headlines saying mortgage rates are still hovering around 7%. But here's the thing. Some buyers right now are locking in rates in the fives and even fours. Sounds too good to be true, right? Well, today I'm breaking down exactly how people are doing this, and just as important, the pros and cons of each strategy, because while these options can definitely help you save money, there are some strings attached that you'll want to understand before jumping in. Let's start with one of the most common strategies, temporary rate buydowns. This is where the seller or builder pays up front temporarily to reduce your interest rate for the first couple of years. For example, a 2-1 buydown, if your loan rate is 7%, you'd pay 5% the first year, 6% the second year, and then it goes back to 7 after that. And here are the pros. You get lower monthly payments early on, which makes it easier to qualify and helps you settle into your new home while saving some money up front. It's also a great tool if you plan to refinance in a year or two once rates drop. But here are the cons. Your payment will go up when the buy down period ends. So if rates don't drop like you're hoping, you could be stuck with a higher payment long term. It's important not to buy more house than you can truly afford once that rate resets. The second option is a permanent rate buydown, which is where you or the seller pays what's called a discount points to permanently lower your interest rate. Usually 1 point equals about 1% of your loan amount, and that typically lowers your rate by around 0.25%. So the pros here, your monthly payment stays lower for the entire life of the loan. If you're planning to stay in the home for 5 years or more, this can save you thousands of dollars over time. And in some cases, the seller can even contribute toward those points as part of the deal. It just depends on how you negotiate it. Now the cons, it costs more up front, sometimes several $1,000s at closing. And if you sell or refinance after a couple years, you might not save enough to justify the cost. You really have to calculate your break-even point to know if it's even worth it. Another option that's making a comeback is the adjustable rate mortgage, or ARM. This type of loan gives you a lower interest rate for a fixed period, like 5 years or 7 years, and then adjust once a year after that. The pros, you start with a lower rate, often in the mid-low fives, which can make a big difference in your monthly payment. If you plan to sell or refinance before that fixed period ends, you could save a ton of money. Now the cons, once the fixed period is over, your rate can adjust upward based on the market. That means your monthly payment could increase significantly. ARMs can work well with short-term plans, but they are riskier if you're planning to stay in the home long-term. Now let's talk about the last strategy, builder and lender incentives. Right now, many builders are offering major perks to attract buyers, like buying down your rate into the fives and even the fours, or covering closing costs entirely. Local lenders sometimes have special programs for first-time buyers or certain professions that can also get your rate below 6%. The pros, these programs can offer incredible savings and make buying more affordable. You can often combine incentives or stack them with other offers. The catch is that you usually have to use these builders' preferred lenders, and that might limit your options. Plus, sometimes builders factors those incentives into their pricing. So you want to make sure that the overall deal still makes sense. So yes, buyers are finding creative ways to get mortgage rates below 6%. But the truth is, every option has trade-offs. The key is understanding your timeline, how long you plan to stay in the home, and what your long-term goals are. Because what makes sense for one buyer could be a mistake for another. If you're thinking about buying a home here in Florida and want to talk through which of these strategies might fit your situation best, reach out to me anytime. I would love to help connect you with a trusted local lender and walk you through your options. And if you found this helpful, don't forget to like, subscribe, and comment below with your thoughts. What kind of mortgage updates or real estate topics would you like to see in the next video? Thanks for watching Ocala, Florida Living. I'm your host, Jordan Warren, and I hope to see you guys next week.